Is now really the best time to buy, or is it all a big scam? We're going to be ripping apart the 18.7-year property theory, exposing why it feels like it's impossible to buy a home right now, and predicting when or if the great property crash is going to happen. Let's dive right in. Welcome to the Buying Your First Home podcast, your personal guide through the Australian housing market. Here we tackle the big questions and the small details that come up when buying your first home. From financial prep to finding the right neighbourhood, we're here to ensure that you've got all the knowledge at your fingertips. So let's take the first step towards unlocking the door to your new home. So Simon, I came across this article on Reddit talking about Melbourne's falling dwelling prices and if now is a bad time to be buying a property. So it kind of begs the question, when is the right time to buy a property? Is it about timing the market or the time in the market?
You know, Jane, this is something that rings true almost eternally for real estate. People, they see property prices start to change and they think, well, prices are starting to soften. If I buy now, then they'll go down. And I don't want to be owning a house that's worth less than what I paid for. And they're falling into a pretty common trap here, which is trying to time the market versus just spending time in the market. Really, real estate is a game about patience. It's not about day trading and trying to find the buy low and sell high over the course of a day or a week or a few months. It's a game of longer time periods, 5 years, 10 years, or if it's your family home, you might have it for the rest of your life. There's some interesting data here to show anybody who's wondering whether they should try to time the market that it's possibly not the best idea.
Wait, so you're not saying, it's best to buy a property in summer because it's got the best price gains, or what are some of the data showing us?
Property is like a long-term game, as we've said. So, over the course of, say, 40 years, Melbourne, Brisbane, Sydney, they've all shown 7 or 8% growth over this time period. So property prices do tend to go up over time. We've never really had a proper housing market crash in the country, really, in the last 30 years. Yeah, you might find you can eke an extra like 0.5% or 1% by buying at the exact perfect time, but you risk waiting too long. By the time the market changes, it might not be changing in the direction you hope, and then you're left trying to catch up to the new price point, which is a lot of people have seen over the past few years.
Yeah, well-located properties in some of these cities have actually more than doubled in a 10-year period. And for the sake of clarity, a crash is defined as anything more than a 20% drop. And even in the recession we had to have, property prices only were pulled back about 8 to 10%. So it's pretty wild. But I guess that comes back to the point of property market cycles. Because not every location's the same. Not every market goes up and down like a constant, like a metronome. Each state has its own property cycle with the periods of slower and faster growth. It's not up and down. It depends, and it can be a bit of a jagged sort of sawtooth sometimes. And it can be influenced by various cycles and economic factors. So government policies, interest rates, other immigration has had a huge impact on these property prices and these cycles.
In terms of the property cycle itself, there are sort of these 4 stages, right? So there's a period of where you're starting to get some growth, then you'll have the boom period, and then you'll have the top of the market, and then you'll have the decline. And they'll kind of, depending on, as you said, where you are and what the current economic conditions are, the exact time that each suburb or area spends in each stage of the cycle isn't really the same. There is some degree of predictability. The only question is no one knows exactly when they're going to transition from one phase to the next.
So the way to really protect yourself and strategies for when you're looking at these properties to make sure, I guess, if you're not going to sort of buy, it's going to instantly drop is really focus on your time horizons. We've talked about this before. If you're trying to buy and getting in 6 months, if you're going to need to move out of the home within 2-3 years, it might be too short based on the property cycles. But even taking a step back from that, as far as asset selection and looking at types of properties, what are some tips, Simon, that you'd sort of suggest when you're focusing on particular areas?
I guess in terms of assets and types of properties, consider your longer term needs and what you might be looking for in your lifestyle a few years into the future as well. So if you're buying for the home you need right now, but you might be starting to plan on having a family, which means you might need a few extra bedrooms, then you might consider building that into your buying plans if you can afford to do so. I mean, the other alternative as well is if what you can afford now is an apartment, looking to buy that now to live in, to capitalize on the equity gains that you do get, and then use that equity to buy a house to live in when you do build a family, and keep the other one as an investment. That's another strategy that you can use.
As far as affordability and repayments, keep in mind that interest rates at the moment, be they sort of 6 to 7% if you're higher in the investment scale, are higher than recent years, but still historically low. So if you want to build on a little bit of fat there, what's crazy to think is that even historically, property values have risen even periods of higher interest rates. Historically, like I said, these are sort of the average almost, but long term, previously they were even higher than this. The Reserve Bank has indicated that a neutral cash rate is actually slightly below where we're at the moment, but you want to keep in a bit of buffer there if you can.
I guess really the key takeaway here to think about is the right time to buy a property is when you're ready to buy. Everything else is before your ducks are lined up, if all your ducks are in a row, whatever the phrase is. If you've got the budget and you've got the deposit and you feel like you know the place you want to buy in and you feel ready, then that's the right time to buy. The people who try to time the market and try to wait until it's just the perfect time, they often tend to miss the mark. And the way I would look at it is this way. If you happen to time the market and you're lucky and you buy at the very trough and then property prices rise like they have been, crazy amounts in a couple of years, that's like an added bonus, but it shouldn't be your real intention when you're looking at buying a home to live in.
Which brings us to our next section, Simon. Are you better to have just bought earlier? So I guess it's following on from this with the changing landscape, speaking with lots of couples, people that contacted me back in 2021, they left it and thought, well, we're going to wait for the market to drop down. And it's obviously done the opposite. This was an interesting piece of research that you sort of looked into if it's better to actually just get in sooner with a smaller deposit or wait and try and build up a 20% deposit, for example, borrow less, have lower payments and be more comfortable. What did the data say?
I mean, if you look at the data from the last 2 or 3 years, absolutely the people who maybe took a bit of a leap of faith and bought with a lower deposit amount and maybe did deal with a bit of financial stress in the short term, they're doing pretty well at the moment. There's been a lot of property growth in a lot of places around Australia. There are stories that you've told me, Jaden, about some of your clients who've bought a property 6 months ago and it's worth an extra $100,000. If they'd waited and they hadn't bought to save that extra 5 or 10% to get to the 20% deposit, they would be the ones who are looking to buy that property that's now worth $100,000 more. Certainly in the last few years, it's been much better to purchase as soon as you can, including getting things like lender's mortgage insurance if you're not eligible for the family home guarantee or the first home guarantee.
And there are, like you said, risks and benefits. So if you're getting in with a lower deposit, you're obviously borrowing more. It has more risk if the market comes off. But if you're buying a home that's going to be right for you over the next 5 or 8 or 10 years, then you should be able to outlast the cycle and carry it through there. But you want to have that stable footing, have the stable financial base there to make sure you're comfortable if rates were to go up in the future.
And I guess in terms of future outlook for rates, I don't think anyone's predicting any major rate rises in the short term. The rates might stay steady for the next little while, but it's unlikely we're going to see any major bumps there. So if you are thinking about buying and you've got that minimum deposit that you would need to start looking, I'd probably suggest having a chat to one of the brokers at Hunter Galloway. They can give you some ideas about how you can plan for this financially, see what you're eligible for, and potentially you can get into a home earlier and then you reap the benefits as time goes on.
So our next article, Simon, why first home buyers are choosing to buy and live regionally. I thought this was a bit of a trend, obviously during COVID when people could work remotely. Everyone was trying to get out of the cities, in particular Melbourne, where there were some pretty harsh lockdowns there. But I'm surprised that this trend's kept up with regional Australia. What's happened here and what's been the influence? I'm assuming affordability has probably played a pretty big part with this.
I think affordability is probably the number one thing here. If you're comparing in Melbourne, for example, the median house price is over $1 million. In regional Victoria, the median house price is about $560,000. So, basically getting twice as much bang for your buck if you're willing to live not inside of the central Melbourne area. And there are similar things in, say, Sydney, where the median house price is $1.6 million or over that. And regional New South Wales is about $735,000. Not far off being $1 million cheaper if you're willing to live regionally rather than in a capital city.
There's definitely better value for money there when you're looking regionally. And I think there's also that step change where you can potentially buy a house for what you would pay for an apartment, really, in Sydney or Melbourne and some of those other cities. I think you had a case study there that kind of illustrates that, right?
Yeah. So this was Jess and Ra Newcomb. They wanted to buy in Melbourne originally, but they looked at what they could get in Melbourne and they really wanted something a bit bigger, a bit nicer. So they opted for a house and land package in Charlemont, Geelong for $670,000. It is technically regional, but it's only 1.5 hours from Melbourne CBD. And I guess comparing it to Brisbane, it's 1.5 hours from the Gold Coast to Brisbane on a good day or on a regular traffic day. So it's not even really that far in order to reap the benefits. So they're getting a 4-bedroom house with a backyard and a double garage. And in the Melbourne, they would have had a 2-bedroom townhouse or unit. Much more bang for the buck for sure.
Yeah, I think definitely the lifestyle and the flexibility of regional makes sense. Over looking at previous cycles, capital cities tended to have stronger long-term property growth just because of the population increases. But we are seeing a bit of a change with regional areas, with new developments, a bit more diversity of housing stock. So it'll be interesting to see if there's increases for regional areas for that population that could lead to further growth. And I suppose if there's any changes to work from home, like there's been some of the bigger banks and bigger corporations that have started to restrict work from home, which I think could have an impact on this because it's really reliant in some of those really remote areas where there's not like a one-horse town. If you're going to long reach or further away, it might be dependent on farming and different things. So if you're going that far out, just keep that in mind if you're sort of looking at some of those regional cities.
I mean, on that note, I'd say that any company that wants to force people back into the office is probably fighting a losing battle in the long term. I work from home a lot of the time, and like if I was forced back into the office, I'd probably be looking for a new job, and I think a lot of people feel that way. I saw another article unrelated to property and finance, which was basically, the workers have decided people want to work from home when they can, and so if anybody does have a business out there and wants to force people back into the office, be prepared to find some new people to work for you. On that subject, Jaden, I just thought it'd be interesting for anyone who's considering sure, it's affordable in the regional parts of Australia, but how affordable is it? There's a few towns here that you can buy a house for a lot cheaper than you can in any capital city. If you aren't really attached to a city lifestyle, these are definitely worth taking a look. I mean, the first one here is Coober Pedy. So anybody who knows about Australian opals would probably have heard of Coober Pedy. And it's pretty unique because people there actually live in underground homes because it's a very arid and almost a desert kind of climate. You can get a house there for a median of $80,000. So if you have a 10% deposit for a house in Coober Pedy is $8,000.
Insane. And there's similar things in regional Queensland. There's Collinsville, 160,000 median house price, 10% deposit, 16,000. It's a small mining town in the Whitsunday region. There's a whole bunch of other Dysart, which is a bit of a mining town. I'd say the caveat I'd attach to these, I remember clients that bought in Dysart, Moranbah, before the GFC when there were mining towns in there, and some of those properties were selling for upwards of $600,000-$700,000. So definitely do your research and make sure if you're buying there, you probably want to hold it for long term because also they're very cheap, but the volumes can be thin. So you might take a while to sell your house if you're trying to get in and out quickly, or just buy a home just to have bought a home with an $18,000 deposit. So we'll include a bunch of there. There's Broken Hill in New South Wales as well, another iconic mining town, and a bit of lots of history there. But definitely do your due diligence because the numbers on the page are one thing, but having a safe investment as well, that's got some of those fundamentals of the population growth and jobs in the future are important to look at too.
So on the subject of making good investment in terms of the housing market, I thought it'd be worth just, as we do most weeks, just covering sort of what's happening with the market and where things are going. First thing is, according to a recent report from CoreLogic, is that the national housing value growth has slowed from 0.7% to 0.5% over the past month. There is that little bit of a slowdown in prices, which is more pronounced in expensive areas and for houses rather than units. But Melbourne and Hobart are the only two capital cities that are actually seeing declining values. Everywhere else, it's just a bit of a slowdown in the pace of growth.
Which is good. You can't just keep growing at 20. Well, I think Brisbane houses were at 15% or 12%. Units were at 15, 16%. It's just unsustainable because wages aren't going up at that pace, which we've covered in previous episodes. So, there's obviously that factor. The other thing that's making things difficult is that the cost of construction is expensive. That persistent inflation is still reducing more properties being built. So that's not a great, it's a bit of a perfect storm really for the property market. But we are seeing some increased stock levels, which is causing some of these prices softening out. So there's more properties for sale that's getting filtered out, but still all-time shortages like we've covered previously, right, Simon?
Yeah, for sure. I mean, I think we've probably harped on about the housing stock levels and what needs to be done about it quite a lot recently. But yeah, it's just the market dynamics are always changing, which is why we like to cover this sort of thing. I'd say in the future outlook, if you are looking at buying, it's likely that growth rates are probably going to continue to soften to some degree, especially if interest rates remain high. But there is that fundamental supply-demand mismatch, plus the immigration that is also sort of propping up the demand side as well. I think we'll kind of have to see what happens with the June quarter inflation data, which is what the RBA will be using to decide on what they're going to do with interest rates. And that's probably going to dictate a little bit about where the market is going to go. If we see high levels of inflation, then that means that we're likely to have a delay in the drops in interest rates, which will put a few people off of buying. But overall, I think, as always, there's different variations in different cities and different sub-markets of cities. I'd say that we're not going to see a massive runaway market as the Australian market as a whole, though, in the short term at least.
So wrapping up, Simon, patience makes a good property investment, I suppose, potentially. So talking about timing versus time in the market, I think it's pretty obvious there that, it's not important to perfectly time the market. It's like trying to buy stocks. Do you buy, Macquarie Bank at this balance? You try and wait for it to get back down to what it was 10 years ago. Like, I think the reality is, in the property market, with the government support, with all the fundamentals underpinning it there, just the lack of supply, restricted construction, immigration, growing population, it looks unlikely that there's going to be any major crashes there in the sort of short term. So it's a matter of then taking a zoom back, and instead of trying to analyze the market, looking at personal situations, saying, well, is my job secure? Have I got a good deposit? Do I want my own place that I want to be able to settle down with? And am I going to spend the next 5+ years owning that property? Then yes, and it could make sense to have a look at buying a home there. But that next point though, Simon, interestingly, if you can get in sooner, when should you have bought a home? It probably sounds like as soon as you can, right?
Yeah, it's a bit what they say about, the best time to plant a tree was 20 years ago and the second best time is now. Looking at the recent data, it's certainly shown that any people who have taken the plunge and bought, even without the ideal deposit amount, they've done pretty well out of doing so. And I'd say that it's, in general, the trends are showing that getting into the market early, as soon as you can get onto that property ladder, in the long term, you'll be rewarded for doing so, for sure. And on that note, I think, even that idea about moving to regional areas due to affordability, I mean, we covered some pretty out there places like Coober Pedy, but the point remains is that a regional doesn't always have to mean like the middle of nowhere. There are sort of satellite towns that are pretty close to the capital cities that can also offer, like I said, more bang for your buck without really sacrificing too much in terms of lifestyle as well. Something just to consider if you're finding that the prices for the types of properties you want in the areas you want are not really matching up, then expanding your search and seeing what else is out there is one way to get a head start on that.
And that's it for today, guys. If you need any help with finance, hit us up at huntergalloway.com.au. We're the home for home buyers across Australia. And make sure you join our community. We've just launched a school community where we're doing weekly Q&As, answering any questions you might have, and helping you out with anything on the home buying journey. Until next time, guys, we'll see you later.